Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Vechain, see what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. If you're looking for a little bit more from the crypto space, check out the Patreon links in the description down below. We do a lot of things in our Patreon, such as AMAs weekly with you guys, as well as trading and exit strategies, bear market strategies, all that kind of good stuff right up on projects and reviews. So check it out if that's your bag. Right, let's get into this. Vechain paired up with USDT, hourly chart. Binance is the data source, okay? Now, obviously, I want to kind of talk about what happened yesterday. So obviously, we see that we actually moved down lower than my expectations, okay? But we're still well within the realm of what is likely here, okay? So these were the most probable areas that we were coming down to, 4.620 and 4.677, okay? So now let's go ahead and take a look at it from a slightly different perspective. If we're going to come down lower, how low is it going to go below those thresholds, okay, without kind of breaking the structure? If it breaks the structure, that's going to be a different conversation, because that would actually lead us into something different, and I will talk about. Let me just see if this is, yeah, let me just push up here a little bit. There we go. Okay, and what I'll do is I'll just grab these and snap them back into place. There we go. Perfect. Okay, so let's go ahead and take a look at this, right? So as we come down here, we can see that actually I would not have expected this to go down lower than the 4.395, okay? So I'm going to just quickly mark this up on this line, okay? This is basically representing the 1.236 area, okay? And yeah, I can do that right there, like so. Now, if we were to come down, it is also another area that we should be acknowledging, okay? And that would be the 1382, okay? So I'm just going to mark this up as well. Okay, and again, I'm just going to mark that with a price label right here, like so. And then, obviously, if we go down to a 1.618, we are talking an impulsive structure, which would change everything else that we've seen. Now, under this, we would also expect to have a correct wave count, which we don't. But again, in crypto, I'm not 100% like going to say that we have to have perfect structure, because we just don't have the liquidity to kind of support such moves, okay? But what I'm going to do is I'm going to remove this fib now. So there we go. We have a few additional low targets here. Now, when it comes to dollar cost averaging, this is going to be my first kind of way I would look at it. I'd be saying 4.6 looks like a really sweet spot for some dollar cost averaging. Now, if you come down lower and we go to this 4.395, another fantastic dollar cost average opportunity. Likewise, if we go to 4.262, I would be dollar cost averaging. If, however, we come down to 4.056, this would be an area where I would not dollar cost average. I would not dollar cost average this area. I would, in fact, wait to see what happens next, okay? Because we would expect a bounce up, okay? And I would potentially be expecting another move down lower, and that would be where I would dollar cost average, okay? So if we hit this low of 4.056, that is actually a position where we would potentially be expecting some lower lows to occur. We'd have options, okay? If we're talking about just hodling and dollar cost averaging, we dollar cost average this move down. We hit that impulsive trigger point. We did not dollar cost average. We waited for a bounce up. We could, if we wanted to, exit, as long as the structure and all the other data is indicating that another drop is going down, because just because you hit this area doesn't always mean that you go down lower. It does mean that we have to invalidate it by moving up higher, which that invalidation point, it would be over here. I'll just grab it, would be 5.175, okay? So if we come down to 4.056 and then move up to 5.175, there is no lower point, okay? So we kind of have to hedge our bets a little bit here to understand what's going on. However, there's another opportunity to buy back lower if that is the case, okay? So if this were a 5-wave structure, we'd have 1, 2, this would be 3, we'd bounce up, we'd then pull back to 5. Okay, it would look something like that. So we want to kind of be aware of these things. Now, that's kind of what I'm thinking in my head, okay? Obviously, the objective for many people in this space right now is to dollar cost average some of these altcoins at the best kind of possible prices. So as you can see, I've been talking about 4.6 for a while. We've come down to the 4.6. And if we take a look at the stochastic RSI, we should still be dropping back down. Now, I'm not expecting it to go down to 4056. I'm not expecting that whatsoever. At least not in this particular wave count. It would have to be a different wave count, and it wouldn't be an impulsive structure or anything like that. Okay. So when we take a look at the 4-hourly, we're actually just above the overbought area, so we can pull that back down. We're oversold, oversold area, I should say. We're oversold on the 8-hour, oversold on the daily, and the weekly is looking to pull back down quite a bit. So we're expecting a bounce up at some point, okay? And it's that bounce up that is going to be key to us. I still think there's some lower points in here, but again, not really expecting those low areas of like 4 cent, maybe 3.5 is an absolute maximum low. And based on bigger macro moves overall, but essentially this is right in the sweet spot. All of these areas, right? It's actually looking more like 4.2 to 4.6 is like a sweet spot for accumulation. If we want to be dollar cost averaging more VET, for example, okay. And then obviously we'll be riding this up quite significantly. There's going to be additional opportunities to kind of get out, but we don't have the wave counts for that, so I can't give you those targets as to where I think we might want to clearly think about it strongly what we do with our positions, right? We spoke about our top end here for Bitcoin, 47.5. We should consider what happens to our altcoins at that point, because you see the reversals. We were expecting a bigger bounce than we actually had. B waves are incredibly unpredictable, and that was really unfortunate. So the B wave bounce just was not as high as I was hoping. I was hoping for 7 cent, and I think we actually only got this thing to about 6.3, and then we broke back down again. So very unfortunate B wave there. But now we're right back down into this accumulation point. So yeah, I think this is a good opportunity. We'll ride it up into the next bounce potentially. We can think about exiting if we want to, if it's a short-term trading, and then pulling back down into whatever lows occur next. Essentially, that's kind of what I'm thinking and what I'm looking at here. But I'm not expecting anything too major. But if we do drop right away down here to 4056, then we should really reconsider what happens next. Analyze the market a little bit deeper, and think about whether or not we want to exit out and buy back at even cheaper rates, maybe 3.5 cent or whatever it does go down to. Essentially, this entire move is corrective. If I come up into our daily, just pull this down, you can see it's all corrective patterns. And we've actually had a very significant bounce up, right? And basically what we're looking for now is a corrective pattern that seems to be forming. Now, I'm not looking to breach these lows of like, I think it's actually, yeah, it's 3.9. So we're not looking to breach 3.9 cent, right? Because that would actually break this. And it would make this whole thing go down significantly lower. Now, one of the things that we absolutely want to kind of hold is the previous high point from August of 2020. That would be 2.2 cent. So we're looking to kind of keep way above that if possible, which so far is looking pretty good. But we're only a little bit more of a correction to actually occur on the weekly. So I think all eyes are really on Bitcoin to know what it's going to do like slightly longer term. But I am still expecting new all-time highs and all that kind of good stuff. I think this is just a B wave out of a larger C wave, or maybe even an impulsive structure going up anyway. So I'm expecting pretty good things slightly longer term here for VET and Vechain. So when we start thinking about an 86% drop is where we were at 3.9 cent. These are incredibly discounted rates, and as always, I like to balance these things with risk reward. And we think I'm not trying to time the exact bottom of a market. You're going to get wrecked trying to do that. I just don't think it's something that is likely to happen. No one really on purpose gets the bottom of the market. It's usually by accident that they kind of get that. And likewise with selling a top. Instead, what we look for is we want to kind of dollar cost average into a position around where we think the bottom is going to be. Now, in a bear market, things like Vechain or Harmony One or whatever, they would drop down about 95%. We've dropped 86%. The question that you have to ask yourself becomes, are you happy knowing that you're not necessarily getting a full discount, but you're getting an 86% discount? Right? For me, I think that's a perfectly valid kind of way to look at it. And I also think, yeah, dollar cost averaging anywhere between these kind of thresholds, and if it does drop down lower, they're bonuses, and we can just dollar cost average for a period of time down here, and then when we launch up to the upside, it will be absolutely fantastic. So all eyes on Bitcoin. I'll do a video this afternoon as to whether or not I think we're going into bear market based on different data than maybe you're seeing from other influencers. But essentially what I'm looking at here for Vechain, I'm looking for the entire crypto space, is now a good time to be buying when fear is at its maximum, right? These are the areas that we want to be potentially buying. Now, for me and Chris, obviously, we were buying way down here at these low points after the March 2020 crash, right? And we did this pretty much for most of the projects that we're invested in. A few of them we were later into 2021, around here, for example. But for the most part, this has been the area that we've been buying, right, really early on. And we weren't getting the exact bottom of the bear market, right? And we weren't getting the peak of the bull run either. And it's about making the risk reward tolerance, viable for yourself, right? I'm not a financial advisor. I can't give you financial advice. But dollar cost averaging when you see an 86% drop, to me, makes sense. But let me know what you think in the comments down below. I'm going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.